TGIF Warriors, how do you look by Friday? Brian, how are you? Michael Weisman, AJ, Brian, how do you look?
Well, one of two ways. You either look like me or you look like you, Dale.
Well,
you've got no hair or it's gone grey.
Hey, man, it's silver.
Silver, sorry, the silver.
Silver, like, I mean, it's the age of silver.
Yeah.
Anyway,
growing like the position.
Anyway, I had a question with you in mind that I wanted to ask, and I learned from you a lot, Ryan. So, say for example, and the yen is bouncing back, right? Took out this level, 37.5. Really, the breakout line was a little lower than 38, but it took it out, came back. Is it possible, and under what conditions can we have, say we get a rally here, but we're going a lot lower, like to 27, or I mean, it's an ugly week, and I don't think there could be a quick rally, but the breakdown portends, I don't know, at least these lows and maybe lower. Could we have an environment where the yen strengthens like that, and there's still a high, and the dollar rallies at the same time?
Yeah, that is possible. The change would be likely on the Bank of Japan doing something. That's when you get that situation happening. So you get a reversal in the dollar, like you say, dollar strength, but dollar yen goes down. It would all be about the Bank of Japan, of which we're getting further rumors of a potential change coming. So that situation, it's likely, exactly likely.
Okay, so I'm with you on looking for a spot to short the pound, but normally you have a strong week. I mean, we could have the beginnings of a reversal, but momentum is just too strong. I'd like to see a break and then a rally to new highs with momentum staying under 70. And and the same is true in euros, even stronger, the RSI pattern. But you know what? Why be a hero? So we've seen them both go to new highs. Why not look for a spot in the commodity currencies? Maybe they're going to be the first to, start turning back down. I mean, we didn't even take out this high, let alone the highs back in February, which, cable has blown away, right? And euro's blown away, new highs. What do you think of that strategy of, sell the weak sister rather than trying to top pick the strength?
Yeah, no, that's a very fair scenario to use. We've been talking about catching knives and picking tops and everything like that, and we've said all week, my show, Flo show, your show, in the chat room, you've got to pick your battlegrounds. Now we had a couple of battlegrounds in Aussie dollar, mainly the big figures. We had 67, then we had 68, and now we've got 69. So fine, you could have had a couple of goes. You could have tried 67, the fade, didn't work. 68, the fade, it didn't work. You wouldn't have had to risk a lot, 20 pips maybe on each trade. You don't do any damage. Now you hit a level that is a bit solid. You can maybe make pips back and make some profit out of it. It's all about looking around at the pairs and saying, right, I trust that level more than I trust another level. I trust Aussie dollar at 69 more than I trust euro dollar at 112. And you do that exercise, and then you say, right, well, if I trust that more, that's the one I'm going to trade. If I trust euro dollar more, I'm going to trade euro dollar. It's okay to be wrong. It's how wrong you are that counts.
Okay. So with that being said, what's your big level in cable? 32?
131.70.
Okay. So we're getting close. We're getting close.
We're getting close. I don't have the confidence in it though. I had to go at 130, didn't work. I had to go in euro dollar 112, didn't work. You know, the 138 finally gave way last night, didn't work. So now I'm moving into a bit of neutral because the volatility is just getting a bit too hot for me to keep jumping around, and I don't want to give away too many, you know, little bits and chips of nail.
Hey Ryan, did you just say 131.70?
Yeah.
Yeah.
Yeah, I don't know if you guys saw it. If you go all the way back, Dale, to 2021, there's a big previous support for the sterling at I thought it was 131.60. I might have been off by 10 pips or so. You have to go out, really go out on a weekly chart. You'll see it. It's right there.
Here.
Right, no, a mouse over to the right. There you go. Yep.
Okay.
So somewhere around there.
Yeah.
Right.
Yeah.
131.60, I believe.
Is that a fib level as well, Blake, for the whole decline?
No, it's just previous support. So
okay, I wonder what the fib is. It looks like more than 61.8 on from this, you know, this decline that we had.
We are above the 618 by like several hundred pips.
Where's 78.6?
134.
Okay.
And change.
All right.
Yeah. Anyway, I'll let you guys continue conversation. Ryan, I was wondering why you were looking at that level, because that was the price that I was looking at for the last couple of days.
Yesterday. Yeah, you were talking about it yesterday as well. Yeah.
Anyway, I'll let you guys. I'll be back.
All right. What a difference.
Yeah.
You know, so you know, that's pretty interesting. But this this is where I think that we're going here in US dollar yen.
It's possible.
Wasn't that the big breakout, man? When you were getting long a year or so ago, you were, you know, once we got through 116, we never looked back.
Lower than that, I was in 103s.
Yeah.
Down that sort of area.
But you held it a long time. I think till what, 130?
120, 125, I think was my highest exit, and then see that pullback.
Yeah.
I got tripped out on the pullback on my trailing stop. I had it too tight, and it done. Yeah. I waited 18 months to get 2,000 odd pips, and then it went another 2,000 in weeks.
Isn't this as aggravating as golf?
Yeah. Huh? I don't make money with golf though.
Oh, do you? That's
I lose money at golf.
That's not aggravating then.
If you go to a shorter term, you go to the 15-minute on this chart. I want to point something out, because I think what we saw last night was pretty much possibly a last blow off. You know, when you get a move that just you think that's it. So that move through to 138 overnight, all the way down to the low 137s. Yeah. I think that was a bit of a blow off. Because the strength of the move after the bounce, you know, that's the strongest bounce we've had in all of this move down.
Yeah, that was it, I think.
138, I think 138 becomes support again.
Right.
And that move will just look like a little bit of, say, bit of excess.
Okay.
And then,
so we're getting some signals that we're about to correct this vicious decline of almost 800 pips in a week. Yeah, that's in a week. We haven't seen a move like that in a while.
But it's got to take out that 139. That's the first big step. If you can't do that, it keeps the pressure on.
Okay. I know Stell's on vacation. Oh, it's the three amigos today. Okay.
Yeah.
All right.
Three Stooges.
Yeah, that's more like it.
Oh, Gregor's here too.
Four Stooges. There we go.
Yeah, there we go. Gregor, I guess he's back from holidays, so it'll be nice to have him here too.
All right, Blake. You know, give me an honest opinion. Forget what the title of this chart is, and tell me what you think.
It's which chart? Give me the chart. You're okay. You're flipping around here. So
how about here?
I mean, it's looking a little toppy at this point. You know, it's I would say that dollar yen. You know, I know you said it's dollar yen, not to look at the chart itself, but I mean, it's, you know, we're starting to make lower highs, lower lows.
they're rebalancing NASDAQ. Okay.
Yeah, you know, actually, Simon, who is he's been in our community for years, in the ForexAnalytix community. He did a write up on the rebalancing and put it in the news and research room. And a couple of points well, first of all, he made a couple of really, really great points in there. But one of the things that I want to say about rebalancing, it's not like when you get a rebalancing, it's not like a shift of it's not like money goes out the door and, you know, it's out of the market and it's going into, you know, it's going back into money markets or anything like that. You got a situation where you're going to get money, you know, taken out of, let's say, NVIDIA, reshifted back into, you know, some other, you know, other LLTC or some other, you know, technology company. It's not like, you know, it's money just being moved around and risk being shifted. So it's not so heavy in a couple of different names, which obviously, you know, we've seen as of the last year. So it's a special rebalancing. And then Simon pointed out, it's only happened a couple of times in the last 30 years. And one of them was in, I think he said 2011. The other one was back in the 90s or something. So, you know, this is a special rebalancing because everybody's getting very lopsided. He made a good point, which I happen to agree with, that it's a lot of psychology too. So that's what you got to really watch out for, is if, like, let's say, you know, Apple comes under a lot of pressure or perhaps NVIDIA, you know, you start to see a breakdown. You know, will it freak out other, you know, people? Chances are, or funds, or, you know, I know index funds will be following it, you know, to for a balance reason, but will it freak out anybody else institutional wise? I don't really think it's going to be too big of a deal, but you never know. You know, you never know.
Yeah, I mean, you know, what they really want to guard against is if there's a correction, and it happens in Apple and Microsoft, you know,
yeah,
that it's just going to make the index look too volatile and scare people away. It's okay when things are going up.
Yeah,
but, you know, the problem that they're trying to solve may actually be what causes the problem. Because, say, for example, people are, well, okay, I'll reduce my exposure to Apple and buy something else, like you were saying. And this is happening right now with the backdrop of a parabolic market to the upside.
yeah.
So what if this same narrative is still in force when the market doesn't have a tailwind and actually corrects, you know, somewhat? That may put additional pressure on that trade.
Sure.
So just something, you know, I wanted to throw out there and fill in some time.
All right, really good. Well, hey Dale, I got a bunch of charts that I can show, and
All right.
and I'd love to hear. I know Greg is here, and guess what? Paul Franco is going to be here today.
Oh my God, what a day.
I know. So it'll be nice to have Paul here. He's going to talk a little bit what he scalps the market, and just really quick, I just want to say this. I've been working with Paul Franco or Paulie, you know, SPZ Trader. Some of you know him on Twitter. I've been following him around for literally 13, 14 years, since 2009 on Twitter. And he started working with me at MB Trading. I brought him on, I don't know, maybe 7 or 8 years ago. And he's a guy that lives off the markets. He always lives off the markets, always has. And, you know, I know what we pay here, and we're not paying Goldman Sachs wages by any stretch of the means. So, you know, he's a guy that's been doing it on his own for many, many years. And he'll talk about his key levels and how he scalps around the NASDAQ 100 and the S&P. So make sure you guys stick around. You don't often get to hear him because he's exclusive behind, you know, inside the community, if you will. Greg is here, so I want to make sure I give him a little bit of time to talk about some charts. But I want to show you just a couple key developments in my view, and Ryan, feel free to chime in if you notice something that I'm viewing that you might be noticing something a little different. So let's start off with the euro, and we had one of our traders, Lucas, in the chat room. He said there's a gap fill at 112.50, which basically capped the market. You have to go back here. Let's go, just stay in the daily chart really quick. If you go back here, let me see, we're 112.50. I think that gap, if I'm not mistaken, is right about, where is it? There's a gap somewhere over here that hadn't been filled yet that just got filled. I think it's back here in 22. Anyway, but what I wanted to show you regarding the, he brought it to my attention yesterday. I just can't remember exactly what it was. We're at the long-term 618 retracement, basically comes in at 112.85. Then you have a confluence of two 161% extensions. So both of those are right here if you haven't seen them. So this is one. Whoops, sorry, I just moved the wrong thing. Let me move that really quick. I'll bring that back. Let's delete this. Okay, so 161% extension of this move comes in oh, I'm sorry. This is actually the wrong one. There's 161% extension of this move, 127% extension of this move, then the 618 retracement of the long-term 618 retracement comes in at that level as well. And so this, obviously, when you get up towards, this major resistance, it's gonna, play a part in the euro. So we are starting to see a little bit of a pullback. Do I think it's going to be a complete reversal? No, I think we could pull back to 111. I think that's logical. That would be looking at the dollar index. It's also hitting the 127% extension. We are very oversold. Okay. To, push back towards the breakdown point. So 111 in the euro, the breakdown point, probably around 100.50, 100.70, somewhere around there in the dollar index is going to be where we find resistance. You go over to the cable. Again, that previous support is way back here in 2021, December 2021. Previous support acting as resistance. If you look at RSI on an intraday basis, we hadn't been that overbought since we were more overbought than November 22. And as far back as I can go back in a 4-hour chart, we pierced those highs for relative
strength.
So,
we were at the top in 21, late 21, early 22.
So there you go. And so, you get up towards those levels, you got to be really careful about chasing the market, right? Wow. Another thing I wanted to bring up with like some of these other dollar pairs, look at the Aussie dollar. Aussie stalled at the 69-cent horizontal resistance. Kiwi may have put in a false breakout. Dollar Canadian is actually, I think, at channel support. Benedict, also from our chat room, one of the traders that I met actually in Charlotte, North Carolina, 2 weeks ago for the first time in 10 years. We got to have a beer. He bought my family dinner. And Benedict, one of my more favorite people around that I've known for about a decade. He pointed up this ascending trend line that also comes into view in the dollar Canadian. So I actually think the dollar Canadian is acting very well, despite the rally back that we've seen in crude oil over the course of the last couple of months. One of the big developments, this is the bigger development that I think that everybody needs to pay attention to from a risk appetite perspective. Let's stay with the euro and let's go to the EURMXN peso. This was my chart of the day yesterday. And this is this is the carry trade du jour. How would you explain the Mexican peso, Ryan, in your own words?
Spanish.
Don't be Friday on me.
That's such a beautiful chart.
The thing about the EURMX, it is a beautiful chart. But this is the carry trade bonanza, right?
More than the yen, just the yen. Financing.
Yeah, I was going to say EURMX must be the bigger.
EURMX is actually that's the ultimate, like but that one's come off quite a bit, right, over the course of the last week. But the EURMX is one that institutional wise, they can remove Bank of Japan risk and really be because remember, U.S. rates are higher than than European rates. So this is like really where you get the wider, the divergent central banks and really capture a little bit more carry. We have been grinding higher over the course of the last couple of days, but we're above the 50 DMA now in the EURMXN, and we're probing really key resistance. This is a shift away from carry trades. So even though equities are, you got the S&P in nosebleed territory, institutions are telling you,
signs.
they're like, look, I'm not so comfortable holding long risk exposure at these levels. That's what the Forex market and institutional traders are positioning around. And
Great insight, man.
Hey,
no one would know that.
Well, I think
I'm sure someone else would, but I mean,
people do
in here,
obviously.
Well,
but
Ryan would,
Ryan knows everything.
Ryan, and Cable.
Well, one thing I was gonna, to put alongside what you're saying there, if the carry trade has gone as far as it has gone, and really the only way is to close the carry trade or shorten the carry trade because rates are going to come back down again. I was musing on the flow show whether that's behind that move in bonds, particularly US bonds, from 4%. Because now, if you're going to start losing your carry because central banks are going to start cutting, you're going to rush to put it in somewhere where you can take that yield for 10 years. No, you could, when that move to 4%, right? Well, now I'm going to lock in 4% for 10 years. Because I'm not going to get that carry. So you get a shift out of the carry into fixed
income. Why the hell not? That was the point I made on the trade-off, Australia. Ryan's on the trade-off UK. That was the point I made a week and a half ago. Is like, why, if I'm an institutional guy, why wouldn't I capture fixed income, guaranteed, quote unquote, safe money, a certain yield? Why wouldn't I lock it in at these levels? And we are seeing that happen. And I think you're right, Ryan. If central banks are all, they've kind of gotten to levels where they need to get, carry is going to be squeezed out a little bit up here. So great point. Hey, speaking of yields, let's take a look at the 10-year. So we've got, the 10-year yields back at, we got the 50 DMA and the 200 DMA coming right into view. Dale, this is your trend line that you pointed out quite a bit. I know we've been looking at it on the 10-year as well. But the 10 years right at the 200-day moving average, you can see that this is the actual notes, right? But you look at yields, we slipped back to a 38% retracement. It's kind of pivotal for the market, but you can also understand why the dollar's starting to also find some support here. One of the last things I wanted to bring up to you is looking at copper today. We're back at the 618. Oh, one last thing, and then I'm gonna ask Grega what he's seeing. Then you got the dollar yen, nice bounce off the 200-day moving average last night. When it was at the 200-day moving average last night, I tweeted, and I'm like, we are at the 200-day moving average, despite the breakdown below 138 and below the breakout point. I'm like, man, and that was pretty much the low, and we bounced. Now I know, Ryan, you said you found a better level than me, but I don't know. I was pretty timely on that tweet last night. But look, the dollar yen's recovering a little bit. I think people are getting a little too excited that the BOJ is going to make an adjustment so soon. We've still got 2 weeks until the BOJ, week and a half. So, So anyway, any thoughts before we pass it over to Grega and see what his thoughts are?
There was one question in there on gold. Why, if dollar's coming off so much, why isn't gold going up?
It's a good question.
That is a good question. And that's the question that's why I'm like, hey, and by the way, silver basically completed.
Silver is doing very well.
Hey, silver just completed what it should. And these are all the upside targets, guys. If you hadn't been around in our community, and this morning I wrote, hey, close enough for government work, as Dale would say. we're at basically $25, but gold, right, hasn't participated. And that would scare me if I own gold. If I own gold, I'd be like, shoot, I don't know if I want to own gold anymore, especially if the dollar has a bit of a recovery, why would you want to be, long? So anyway, it's a good question.
I think we will go to 1980 today.
No, well, that would complete the inverted head and shoulder pattern.
Yeah.
It's like WD Gann. Grega's down to the 24-hour period for price projections.
Grega.
Yeah, I think you're taking that wizard nickname a little too seriously, my friend.
So Grega, what's on your radar with all of these big moves this week? And why don't you go ahead and take the screen, and Paulie's going to be jumping in here in just a second if he's not here already. Oh, he's already here. Hey, Paulie, good morning.
Hey, Paulie.
Hey, we can barely hear you, by the way. Grega, why don't you take the screen for a few minutes? Let us know and show us like what you're seeing with the dollar, because obviously this has been a really big move this week. So what do you got?
Back, Blake.
All right.
Okay, so we are finally coming down from this big consolidation. So I assume that we can resume even lower here in the next few weeks, potentially looking for this triangle measurement target. Just from a basic technical perspective, we may even stay bearish for 96. If suddenly, let's say that in August we see a recovery back above 101 or 102, then I think that we will step into a new corrective phase. So for now, it's still a downtrend. It's a very powerful one, and I would stick with the current weakness until as long we are below 101, 102 level. So for now, on the opposite side of that, of course, I am expecting those commodity currencies to move even higher. If we look here, okay, here is Kiwi. I think that we have a very nice constructive uptrend here in progress. So I think that more strength should be seen, because we need 5 waves up away from that June lows. And by the way, we shared also PIP based on, for our members in ForexAnalytix, based on this very nice Elliott wave setup. So I think that all of those commodity currencies, stocks, Japanese yen, everything will go even higher, in my opinion, at least next week, if not even later on. Also, since you mentioned earlier gold, I think that gold is also in a very nice recovery here. So I'm looking for a retracement all the way back to this former wave 4 here towards 1970, maybe even 1980. And of course, we are seeing silver doing much better, because gold silver is moving to the downside, which is
huge.
Yes.
Yeah.
And that's that's a positive sign for overall for metals in general, in my opinion. So I think that more upside here on gold is possible. And since I said earlier 1980, that's based on this intraday wave structure. We have very nice higher highs, higher swing lows, and looks like that's a minor consolidation after this strong drop. So I think that gold will try to catch up silver. And as Blake said, there is a head and shoulder target around 1976, or maybe 10 points higher are these swing highs. Also looking at this, it's actually 10-year US notes versus gold. Okay, notice the 10-year US notes actually here made this failure break at March levels. Okay, and gold was able to hold this support, and now it looks like that as soon as 10-year US notes made failure break to the downside, obviously gold found new buyers as the US yields come to the downside. And in fact, I see potential wedge here. Okay, coming out of this wedge, this could make much more upside here. Even if we will stay in these very big ranges between 2022 and these 2023 highs, we still need 3 waves to the upside, right? So in such case, that's still one part of this ongoing strength. So if that's the case, we know
where would that take the 10-year yield approx?
Yeah, I have it I have it here. I think that we could go towards 3.4.
2, 3, 4.
Yeah,
Okay.
that would be the minimum objective. But as you can see, based on this wave count, I'm looking for wave C actually to move much lower.
330-ish.
Yeah.
Right.
So of course, on the opposite side of this, dollar should obviously fall much further, right?
What you have upside targets for cable and euro?
Yeah, just a second.
Because everyone's thinking it has too much mo for me to think about, but
Yeah, I think that whenever we have such a strong week like this one, it's very good to look at the higher degree time frames chart.
yeah.
Right. So here we have this. Actually, I updated this one for members as well this week, and looks like that we are approaching this level here, this line connected back from 2014. So 1.33 to 1.35. That's the area where we could potentially see some slowdown. Okay, and why I'm talking about the slowdown is because I still think that we could be potentially here in a fifth wave, but fifth wave is still ongoing and incomplete. So I think that this monthly trend line, these upper levels, as I said, could be retested.
Okay. Would that be a completion of wave 1 from the low in October during the gilt crisis to 5 to complete 1, and then we should be looking for a 2 to retrace it?
Yeah, this is what I'm looking for, but also that's valid scenario as well. Let me just adjust a little bit. Okay. So you can see it now, additional wave count here. So in either case, I think that this could be a very strong resistance for the summer, I think. Okay, up here. But after pullbacks, either in very deep or very small one, but in 3 waves, I think that we should resume even higher.
I mean, that's not even what 23% back. Wouldn't you expect after completing a big wave like this, wave 2 to be 50%, 61.8?
Yeah, that's if the first impulse is not that extended or big, like in our case, then yes.
Okay.
You
So
may
it's too extended.
You
it's
may
too
not
extended to look for that then.
Yeah.
Right?
Yeah.
Hey, Greg, Jerry asked if you could take a look at crude, because when crude broke the $75 level, it ran right into the 200-day moving average. I mean, it was like a straight shot arrow from $75 to 77.25, which was the 200-day moving average. And it's kind of stalling here. But are you seeing crude as being bullish?
Yeah, mid-80s.
I mean, this week we have seen a break out of this downward channel. Okay, so I think that we have room for more upside. I would be looking for $84 for this summer. And if you look also on here on a 4-hour time frame, again, we just broke through this week 75. So I think this should be a very strong support next week. And as long as we are above that level, I think that this current strong impulse should resume even higher, I think. So
Got it.
On the downside, I think that we are back in the range if we drop to 70 to 70. But of course, looking also, since you mentioned crude, I think that dollar NOK is pretty interesting. There we have a massive breakdown.
Big head and shoulder pattern.
Wow, looks like the yen almost.
Yeah, but because of that very strong drop, I see this as a wave 3, right?
Okay.
So I would be looking for something like this. So after a rally, I would be expecting more weakness here into a 5th wave down. So targeting these levels here.
All right, lastly, and then we got to bring in Paul Franco. The S&P, obviously, you know, all eyes are on the S&P.
Yeah, don't show it.
We're at channel resistance. And by the way, guys, if you're a ForexAnalytix subscriber, Greg puts up his Elliott wave charts on our platform. Wow. Every day, updates them. So
there he is. Right. He's at 5,000.
We are here breaking this key level, which is Fibonacci equality level of the first leg. So if that would be corrective rise, that's the area where we could potentially slow down. But what's good about the bull market, the current phase, is that even if that would be wave C, meaning that there will be limited upside, wave C should be structured by 5 subwaves. And so far, that's not the case yet, right? So even if there would be limited upside, we still have room for further upside after the next pullback. So I think that currently we are just printing new highs here for a wave 3. So after a pullback, I assume more upside is coming.
Where's that negated? Where would that count be negated? And
Around
by downside action.
Yeah, around 4,200. If we
42 is key. All right, so it's key for you too. All right, thank you,
to
Greg.
stick with the bullish trend. Yeah, exactly.
Yeah. Okay.
Thanks, Gregor. We really appreciate you joining us today and giving your insights via Elliott Wave. Remember, you can obviously follow Gregor on Twitter and you can follow his service. You can be in the ForexAnalytix community and get his analysis every day as well. We appreciate you. And Paul Franco is here.
You know, Blake, before you get going with Paulie, you know, I've learned a lot, enough to be dangerous about Elliott from Gregor.
Yeah.
From going to the site and looking at his counts, and you know, if you have an interest in learning Elliott, you learn by seeing how a guy like Gregor labels things. And
yeah, it's amazing. And the reason why we brought on Gregor, really in the very
same
beginning,
with Andre with harmonics, you know, I mean, the same, you know, if you don't know it and just watch their work on the site, you begin to get the drift.
Right. I mean, and that's the thing is Elliott waves are and have been more foreign to me. And like you said, I've picked up a lot over the years, but bringing on somebody like Gregor, having him here, and you can read his analysis every day, know exactly what he's thinking about, you know, these 30 different instruments. It's huge and you learn a lot, and that's important. So thank you, Gregor, for being part of our community for so many years.
Thank you for having me.
Our pleasure. Paul Franco, our scalper du jour. How are you?
I'm doing good, Blake. How you doing?
Good. And you know, as I mentioned to everybody earlier, you know, you really are in the S&P room. Here's like our general chat room, but you go over into the S&P room, you'll see Paulie's charts all day long. He posts you know, all of his, you know, setups and what he's looking at and, you know, what he's navigating around. And it's always good to hear why you're looking at key levels in the markets, because I think that you really just look at levels. So tell us how you break down the markets and show us kind of what you do as a trader, because you've been doing it for so many years, living off the markets. Give us a clue on how you do it.
Okay. Well, as mentioned, I do look at the levels, but my, you know, I like some of the work that, you know, like Greg was pointing out, and my work, or at least the way I look at everything very short-term oriented, as far as getting an idea where markets will go from. Sounds basic, but I mean from level to level. As the market moves, so I'll look at my much longer time frame is going to be. For me, a super long time frame is going to be a 2-hour chart, and I'm going to go on in. Bear with me one moment. For me, a real long time frame is going to be a 2-hour chart. And just to speak of yesterday, I posted that chart in the chat room. I think it was like at 5:30 in the morning. I think it was. We were looking for this market potentially to get here to this big key weekly level, which was 15,616. We actually went there within half a handle, then we pulled back. We came back above it, and as the market, you can see right now, as you know, at the end of the week, people that had been short the market, basically they were just trapped in this market, and you know, people are trying to take the other side. That may be fine on a short-term scalp type of thing, but what I was looking at and trying to explain to some people is, with this thing gapping in the morning and the market coming into, as it was Thursday, I thought, well, they're going to go on and force these people to cover, because anybody that's short from Monday, Tuesday, Wednesday, they're all underwater, and so this market is not going to be forgiving. It's not going to give you that allowance to go in and come back and buy it, or if some people were thinking, oh, we're going to get a turnaround. And so essentially what we saw is I did some scalping at that level, but as they started to go and move on, I'm thinking this thing is not going to be forgiving. I wasn't sure how far it was going to push much higher, but it continued to and ended up stopping out quite a few people. Today, what we're looking at right now, there is a daily level that the market came close to yesterday. It was a past prior daily level, which is 15,762. We've wrung so many people out, surely not saying there's no reason. That was one of my concerns I was telling the people, is that there's no reason for someone who's long to go on and be getting out if they're holding for any length of time. They're just going to go, maybe they'll take off part of it. Now, as we come up to these levels, we'll go on and see the market kind of give back some. But on a Friday, basically you're standing in the way of a moving train. Now, what we usually do is when we're in the room or scalping, you get more of a two-way action. Well, we're not going to go on and see that today, or we're having a tough time seeing something like that today because the market's on a runaway train and there's not really much give back. So one of the things that we're looking at the same time is we'll look at the options that are expiring on that same day. We'll look at the calls and the puts, and then we try and take a look at where we see as far as outsized volume coming in during the day. When we see that come in on a particular play, we've seen that it was good point was, I think it was Tuesday, right before the release on Wednesday of the inflation report, right into the close. I think we saw 12,000 of the near strike of calls being purchased.
Is that a new part of your analysis now that you're looking at option sweeps on the 1 day? Is that a fairly new piece of your arsenal in trading?
Yeah, good point. Good point. It certainly, Dale, it is.
Because they are good tells, aren't they?
Well, yeah, actually they are. There's a guy that I trade with that he would, point out, wow, look how much it had moved. And he does some work in there. And so finally says, well, I better go on and keep an eye on this, because even with the way the market we trade, and as I mentioned, it's so short-term oriented. What we look at, and let me go on and move this here, flip this around, bear with me.
Because my buddy calls that wise guy action when he looks at option sweeps.
Yeah, so what's
like
we're
smart
looking
money.
Well, but it's so for us, it's so short-term dated, ultra short-term dated. So, right. You can see here on the 5 minute chart, that's what we're going to be looking at, the 5 minute and the 30 minute, and we're going back and forth. Like I said, it's not as clear. I want to say it's clear today is we're on a one-way train. It's just like, well, you're not getting a lot of two-way action. It's just going one direction. And where I do the most, or do the best, is when I get that two-way action and I'll look at specific levels and see the market rotating back and forth. Where the option plays help intraday, and I'll be looking at strikes like this morning. You can't see it right here because it's not as big, but with the triple Qs went out at 379.15. So I've got the 379 call, the 380 call, 381, 382, 383, and then the same with the puts. And so I'll have those in this area. Like here's is from yesterday. Show it right to you. Here's on the 380 calls. And so I'm looking for, you see these spikes in volume. Like I said, it's not as good of an example now because we were just going on a one-way train, okay? Whereas, like I said, on Monday, Tuesday, and Wednesday, boy, we saw some big moves where you see a big spike all of a sudden in the call options. And at the time, it looked like I remember what level we're at. And I said, wow, you know what? And I go, that looks like they might be actually just exiting out of these options that they had. And we saw a correspondingly big jump in the puts, or sometimes when the puts are going dropping low, you see this big spike out of nowhere. And that suggests, oh, wait a minute, maybe we're starting to go and see a turn. And that's where we step in and come in with a position, whether it's a short side or the long side, and then based on where we're at within the confines of the levels. As I said, right now, there's not a whole lot of things you can hang your hat on as far as we're just in I want to say a runaway market, but it's almost
blow off.
like that.
Blow off.
Yeah, so if you take a look here, one of the things I've been doing now, they call them now the Super 7. But I'll go on and be watching, like here's Apple on a 2-hour chart. Go and put this here. Amazon right here, you can see Amazon still pushing higher, and with Alphabet, we'll all be looking. No, we'll all be looking, but I'm saying we're looking at whether one of them is breaking, or if the market is breaking lower and we're starting to hold, are we starting to see Apple or in this case Meta? Meta's been on one heck of a run, and we look at it on a 2-hour chart, but we try and see as if we're starting to see divergences in any of those, what we like to call, or what they now call the Super 7. Here's with Microsoft. And once again, that helps us when we're coming in. We're actually just going into specific levels that we're looking at, using the options to go on and get an idea if we're seeing a spike. I mean an immediate spike, and you'd be surprised the moves that we'll go on and see. And then, as I mentioned before, we'll go in and look at whether it's the puts, same thing as doing an opposite reaction, or if the call option, we're starting to see a lot of volume. Maybe it's a little bit of a blow-off volume. Yesterday, as the day went on, honestly, there wasn't as much action. Not saying there wasn't, but we weren't seeing those big divergences. Well, that kind of made sense because the market was basically just on a one-way street, but it was relentless. It was quiet, but it just kept moving on. So we'll see what happens today.
What hours do you keep in there for people who want to come in and hang with you, buddy?
Well, I come in. I generally post the 30-minute chart coming in, and sometimes as much as a 5-minute chart, right around 6 o'clock in the morning, Central Standard Time. But we do most of the action once the cash market opens, because lots of times you'll see bigger moves or offset moves that are neutralized in the U.S. session. So we're there basically from when the market opens, cash sessions at 8:30 in the morning, till when the market closes it. For us here in Central Time, it's 3 p.m. But like I said, it's really turned out really well using these short dated options. And I'm not much of an option player whatsoever. But
I knew there was something different about what you were saying.
But the action that you do see,
they're great tells.
You got that right. It's a big tell. As I said yesterday, not as much, because like I said, you'd be surprised. We saw that, like I said, Tuesday, and I didn't even realize that till later on. It was about 2 strikes higher when I saw. I think it was 11,000 calls bought in the last 7 minutes. Oh my God, that was a big tell, because I had one friend of mine was saying, yeah, they leaked it. They're leaking it. And sure enough, when it came up, you saw the NASDAQ just goes and rips up. And the same thing, now that was on Wednesday. When we saw the turn, the same thing, you saw an explosion in the puts come in.
Tommy's asking, where do you monitor that option activity?
You can do it in, I use, for my analysis, I'll use, you'll see sometimes, hang on one moment. Like I use Motive Wave here, but I also use, if you want to see the option activity, you can see it there if you just have TD Ameritrade. And that's what I use. So these charts, even though for some of the work that I do, like, I don't know how long I was going to be on. So I wasn't, say, oh, this is exactly what I do. But one of the things I look at, go and move this here. Like this is on in Motive Wave, and I'll have the 5-minute chart, and I'll have, like, push this up for you. So I'll have and you can't see because right now it's not as well displayed. We're having hit the cash session, but you'll see spikes in what I call the delta volume. When you can see here yesterday, I posted that chart on Twitter. You could see people getting stopped out. We had see whether you see it on my stream on Twitter. I did go in and share that, usually just stuff in the chat room, but every now and then I'll share something in Twitter, and I did share quite a bit yesterday. So you see the big spike, you can see people being taken out, and then correspondingly you can use that to your advantage, or in the sense take advantage going the other direction. Now yesterday, as we got above that 615, 616, I was telling people, you got to be careful. This thing, I got in a few quick scalps. This thing is not even giving back much of anything. I thought, you know what? I'm going to be careful myself. I think I said on Twitter too, I made a few nickels. I'm going to go and be sidelined for now because this market wasn't forgiving. We did goose the stops, and you saw that with a big spike I don't know if you can see that. You saw that with a big spike here. You can see the big spike right here. As they took the people out, you can see that right there. Sometimes you can go and use that to your advantage, because if you've reached a top and it looks like it's potential for a break, you'll see these people getting stopped out, and you can just turn around and go the other direction. But once again, as I said, as it got above that weekly level of 15,616 and it wasn't given back, I'm thinking, wow, anybody that's short, they're just gonna go in and take them out. I didn't think we'd rally this much, but they did just that. But getting back to the options, so if you have TD Ameritrade, you can go in and put these in. It's just simple as just put them in as the, in your quote market or quote box right here.
Yeah.
And then what I do is I go on and put the charts, like I'll have the different strikes. So if you look here, that was the calls, and I'll choose the strikes. And here's where I've got the puts. So same thing here. If you see, and you can see there was just a modicum of buying. That's not very much. It shows 1,600 real, and I have it on a 2-minute chart, 1,600. But once again, as you go in towards the end of the day, you have to think about it. My trading is so short-term oriented. Who's going to step in now? People probably, I'm thinking, those that got run over have already been pretty much run over. So I would be keying in on to see whether or not it can get to this, the NASDAQ can get to this 15,762. It is a level, a daily level. It's not a huge level, but a daily level from a low from over a year ago. We may go up there, maybe we get up just above it, and then we start to maybe pare back. But once again, on a Friday, you have to be careful, because you have to think, people are thinking, I don't even want to step in here. And one of the things you want to look at, talking all over the place, but you want to look at, and I'll share that in the chat room, you got to look at why I was not constructive to saying, oh, we might see the turnaround that we saw on Tuesday, on a Wednesday, was because the day of the week, it's Thursday, and this 50 pips used to say what they call the Friday flows. Anybody that's at that point, as I was saying yesterday, anybody that's short from Monday, Tuesday, Wednesday, they're all underwater. And the worst thing you want to think is, oh my God, I don't want to go to the end of the week and still be short and further underwater. And you can see here this move in the NASDAQ. They just were taking people out. And it wasn't huge moves like we've been seeing in the NASDAQ, where when I say huge moves, it was a big move overall. But I'm saying you were seeing these rotation moves. We simply weren't going to see that. It was just a one-way market. And you can see people were being taken out with their boots on. And so what I was trying to go in and share with people is that, hey, look, when you get in a situation like that, as you go towards the end of the week, know how the market is from the day of the week, how it's constructed. If we're in that type of situation, the market's not going to be very forgiving at all. And once again, that's what we saw, this market going back and forth. And you can see here, as we go, and I was trying to go back, over the days where you see the good action that you get during the US session of this back and forth activity. And the same thing here.
Paulie, can I ask you, since you showed the Apple chart and it was weaker than the other charts you showed, what any option feature in Apple that you've noticed this week?
No, I don't go into the individual equities. I mean, that's
okay.
Just
the OGTs.
I'm only going back to this one. Pull up on the Apple. What we're looking for is, and here's Apple, and we're looking on a 2-hour chart. And one of the things I did share with the people, and I did that with Blake on the webinar, the daily roundup several days ago. And I said, if you look at the charts, they're all pretty much, if you looked at the 2-hour charts on these markets, they were very similar. And you can see how, now you can see the Amazon breaking out. But I was telling Blake, I go, at the time, I said, you see, they're all kind of similar. And I go, and we had broken support, and I go, but we're at or above support. We're just below support or at it. They're all basically trading similar. So I'll look for those similarities to see if we can get the market to go and move higher or potentially break lower. And people are looking for a move lower, but once again, that's what we try and look at.
Apple looks the opposite. Apple looks the opposite. Doesn't look
well now, but I mean, it's had such a fabulous run. But one of the things you look at, even though Apple, it's maybe not blowing out the door like Meta, but here's the deal: it's still, and I was, one of the things I shared with some people when we were looking at it on the daily roundup, I'm going, at the time, once again, this was Tuesday, I told them, I go, it's still constructive. It's still bullish. I go, when it was breaking lower here, I go, it's bullish, but let's just call it neutral bullish. I go, we're not seeing a break. And I told them, I go, when we can break below this, and I told Blake at the time, I go, what we'd be looking for is if we can, when we break down here, we're holding overall. We'll probably get a little bit of a bounce. I go, can we get that move to hold below this break? If we did, then you'll see a more bigger move roll out in NASDAQ. And we haven't seen that. Now we've seen just the opposite. Now after the breaks, look at Amazon. It's gone to new highs again. We look at the same thing with NVIDIA. Look at NVIDIA. It won't even stop. I do have a level. I have to go back.
A comet.
Yeah. So once again, like I said, we look at that to go and confirm or see some potential weakness during the day. I'll look at those with the sometimes now call them the Super 7. Here's Tesla. Same thing. You see how they're all.
Well, remember the movie, The Magnificent Seven?
I remember
like
the title.
that term.
Yeah.
You remember it? Yeah.
Oh yeah. You know what? I actually watched it about a month ago or 2 months ago.
All right, let's call them that, man.
But you can see here, the only thing is now, all of them, not all of them, most of them, here's look at the Tesla, still looking pretty strong. NVIDIA, now that's like on a breakout, the same thing with Meta right here. But some of the other ones you can see right here, they're close to their highs, but not at their highs. Now the NASDAQ, the NASDAQ futures, they're out on this breakout high. So I don't know how much longer it can stay sustained. Now, I'm not saying, oh, it's a sell or whatever, but then that's when I look at the levels and I say, well, God, it got above that weekly level and which we had that 15,616. And I did go on and state, I said, hey, look, I go, yesterday, I even mentioned on Twitter, I go, we might be able to go on and because of the way it is at the end of the week, we might be able to go on and move above that. Hang on a moment. And then we'll see whether or not we rotate back below it by the close of the week, which would be, here's the 15,616. Well, right now where it's at, it certainly doesn't look like that. And God, that you have to wonder whether or not this move is going to continue higher. I think listen to Greg, he was saying the S&P, I think it could go higher. Getting above this 15,616 on the weekly is, and that weekly, I'll go and show you. Let me show you. Let me see if I can go back here. For those that trade much longer, hang on.
Yeah, it's a bullish market. It's a bull market.
Oh, yeah. But hang on one moment. Let's go put this right here. Weekly. I'll show you where I came up with that. There we are. So if you look at that, look at this move here. Here's the all-time high. We come up in here. We're looking on a weekly chart, and we get this. And I think I shared this on the daily roundup. You look at this gravestone doji. That's my most favorite candle stick because it almost always pays out. And you can see here because usually at that point, even if the market tries to rally, at least it's going to have a difficult time. But you can see we broke lower. But if you look on here, you can see here, there's that 15,616. It kind of comes in play with the other lows right here. But you can see we've got what I like to do in this case, a medium legged doji, which means bulls don't have control because we finished in the middle, means bears don't have control because we finished in the middle level. This is so I came up with this. I said, when I was seeing, I go, where can this market go to? I was thinking the day before. And I thought, okay, that makes sense. I think we might just go on and get to 15,616. So that's what I was sharing with people. And in the morning on the release of the inflation report, it came within half of a handle from getting there. And then it sold off, came back, took it out by 5 handle, sold off again, got up a little bit above it, sold off again 40 handles. But that's what my concern is now. If we're able to close above this 15,616, that opens the door for them now to go back to even higher highs. And to me, the door's open now. The next up move would be the 16,000. Now we have to see what happens first. To me, when I look at some of these other, as you mentioned, the big, they sometimes now call, as I told you, the Super 7. Well, now if you look at these now, the NASDAQ itself has had such a huge run, and these big Super 7, if we look at them on a daily basis, And even on the weekly basis, there's Apple on the weekly basis. Amazon, same thing. It's come up to a pretty key level right there. Same thing. We're running to. I don't know if we can, how much further we able to go by. But once again, it's hard to take a stand on a Friday. So for today, I'm just going to pretty much sit back and observe. Now, if I see something big happening, that'd be fine. But once again, like I said, what I would focus on if someone's trying to play things overall, I would look at this NASDAQ as I was sharing. Go back to that moment. That 15,762, that I would be looking at potentially as a level. As I mentioned before, it's a daily level, but you have to look at where you're at. Go back there and switch this to the daily moment. You have to take into consideration, there it is, the 15,762. This market's like on a runaway market. I'm saying, who the heck's going to stand in the way of this thing on a Friday? And generally, think about it this way. Are you likely to see a reversal on a Friday after a market's even above a weekly pivot? Not likely. So that's one of the things, as I said, I try to take things in percentages as to, okay, now maybe we might see on Monday, I'm saying if the market stays here, we'll see some new money come in that'll push a little bit higher. Then maybe we can get a little bit gassed on Monday. We'll see if we see the market kind of run out of gas. Maybe it'll rotate a little bit lower going into Wednesday. But for Friday right now on this market, on a breakout above that weekly level, wow. Like I said, I'd be very careful trying to stand the way in this thing. Like I said, as a scalper, I might be able to try and take advantage of a few moves, but to me, at least for me, unless I'm looking super short term.
It's a no trade day. No trade day.
But for the most part, like I said, I have to think so, because even the people say, well, why don't you go with the trend? I know lots of times I do some trading with, not trading, but we share information with E-Mini Wizard, and he'll go in and pick up and say, okay, he'll just buy a little bit lower and rotate right back out of it. And that's, for me, like I said, right now, we've had such a phenomenal move here. I think we'll get a couple of moves this morning, but it's going to be tricky. Now, I will be looking to see if it makes a move to 762 and the market runs out of gas right there, then we may be able to see this market rotate back some. But once again, from a percentage aspect, like, wow, could we see a big move like we saw on Monday, on Tuesday, on Wednesday? Most likely not. Like I said, Thursday, we did get that big move, but it didn't. We only rotated back 40 handles. Rotated, rallied back, rotated back 40 handles, rotated back 40, and then when people couldn't get out, they were forced out and they took them out with their boots on. So once again, I think you probably get people to say, you know what, I'm done for the week. I'll just wait till next week. So once again, you got to have, so you got to have those people, there to play, to go in and take advantage of the movements. And as I said yesterday, I didn't see anything in the options that were saying, oh, wow, maybe we're going to see this. We're going to, maybe we'll see a good turnaround on Friday morning. The only thing I'm looking at right now, as I said, don't want to belabor the point, would be at that daily level from a year ago, 15,762, and see whether or not, and we came up short of it. So we'll see if we can't, maybe the market can make one more move, but all of it's going to be, unless anything can happen, they'll all
another place for people to learn
trades.
to be a trader. If you're, a stock indice trader, spend some time with Paulie. You could tell.
They trade. I used to trade FX and indices. I try and tell people they trade. They're their own different animal, and they trade completely different. And you have to look at and I don't look at oscillators or anything like that, but I do have the moving averages on there just to see momentum on a short-term basis. But so much of what these indices you'll see is just a momentum where it takes you from one level to the next level, it pulls back, and it's like, wow, how could it be on the bid so strong, and then all of a sudden it's all on the offer? They don't even want to own it. And with NASDAQ, and it turns around and comes back, and we've seen those moves on Monday, Tuesday, Wednesday, going back and forth, and then we hit Thursday, and it's just essentially a one-way train. But that's why I started incorporating the options to go in and give me basically a little bit of
a bias.
Well, no, but true. But I'm saying, give me a little bit of a heads up when we're going into a turn. We're seeing a turn. I am starting to see some of the big sevens start to come back a little bit. Can I get something to confirm the move? And that's where those short dated options that expire the same day help me out.
Okay, buddy. Really can learn a lot from Paulie. and you can tell he's passionate about what he does, and he's not shy about talking about the market.
Yeah,
Right,
Paulie,
Blake?
thanks for being here today. It's really great to hear your perspective. I know for a lot of traders that don't get to hear you every day. I know I have the luxury of meeting with you every day on the daily roundup, but I know for a lot of people, they don't. So it's nice to have you here. And Dale, thanks for being here and being our guide throughout the course of the week. And Paul Franco, thanks for being here on your Friday and spending some time with us.
Yeah, great.
Yeah,
Good.
Paulie. Good to
Thanks a
hear
lot,
you, man.
guys. Enjoyed it.
Okay, Blake, have a great weekend.
You do the same, Coach.
And Jane, have a good weekend. Everyone else is gone. And our community, have a great weekend, everyone. We hope we added value to what you're trying to do. You know, everyone, you know, shouldn't have been long the dollar. We all had biases. The breakout in euro, you know, one more panic low under par and Dixie. So hope you're on the right side of things, and we'll see what we could do next week. Don't just count your pips, count your blessings. Blake, stay cool. It's gonna be 105 here today.
It was 85 degrees as a low, and it's going to be 110 or 12 tonight. Yeah.
It's like your 14th day over 110 or something, going for a record.
It's hot. It's hot.
Yeah,
it's hot.
okay.
And I'm going to actually go out for happy hour, which is going to be silly. So I don't, you know, whatever.
All right. Have a good weekend, my friend.
You do the same. Thanks everybody. And hope you all have a great weekend. Stay cool out there. I know globally we're hitting highs around the globe. So stay cool, stay hydrated, drink,
it's a dry
as
heat.
K-Man would say in his behalf, save water, drink wine. So.
Yeah, that'll keep you hydrated. All right. Have a great weekend, everyone. We'll all see you Monday. Adios. See you, Blake.